If you're a buyer, you want to know if prices will drop. If you're a seller, you want to know if prices will drop. Many people have been expecting home prices to drop hard since the day interest rates double in June of 2022. But home prices are not budging. In fact, the median sales price in the Phoenix, Arizona metropolitan area is exactly the same right now as it was a year ago last October. This is Celina Acosta with your monthly market update for October of 2023. And stay with me till the end as I explain what happens in markets like this one, what's going to happen with prices moving forward, and if you're a homeowner, is your equity safe? So despite 10 interest rate hikes since June of 2022, home prices have not crashed or come down significantly, and they probably won't. A lot of people think that interest rates go hand in hand with home prices, like if one goes up, the other one must come down and vice versa, but it's a little bit more complicated than that. So despite the persistent affordability challenges that we are facing and losing some buyer demand, it hasn't been enough for a market crash. So yes, your equity is safe. But you know what? This is the best time of the year to be a buyer in Phoenix because price reductions typically peak in October and November. Most sellers that list their homes for sale in October are motivated to close before the end of the year. That's their plan. I see subtle signs that the seller market is weakening, and although we're still in a seller's market by definition, at the current rate of decline, we could see a balanced market by the end of the year. So if you're a seller, please allow for longer days on the market. Make sure that you invest a little time and money in improving the condition of your home prior to listing it if necessary, and stay open to help buyers with closing costs and funding rate buydowns. So sellers are motivated this time of the year, but not as motivated as builders. New homes make up 22% of active MLS listings. 29% are in Maricopa and Pinal counties. Builder incentives are including not only closing cost assistance, but select upgrades and significant permanent and temporary rate buydowns. I recently made a video describing how a builder I visited in Gilbert was offering $30,000 price reduction on their base price and an additional $30,000 in seller concessions, buyer closing costs, and builder options, or a combination of these. That is very generous. Just a reminder, if and when interest rates go down again, these incentives are gone. If you're one of those people or know somebody who bought a house from a builder in 2021, you were simply either turned away or enter into a lottery to see if you were the chosen one, and you got zero incentives. And if you mention a price reduction, they would just laugh in your face. So let's just keep things in perspective. And builders are not the only ones giving concessions. Almost half of the sellers in the resale market offered closing cost assistance to the buyers in the sales of the last 30 days, with a median of $8,500, about the cost of a 2-1 temporary buydown. I talk to a lot of young people and I hear their frustration about this market. A lot of young people really want to buy their first home, but feel that it's almost impossible right now, with prices and interest rates being so high. And they talk as if today's housing market conditions are unique and unprecedented. However, we had much higher rates than this not that long ago, and high interest rates like today bring out a lot of tools and opportunities for buyers that only emerge when the market is stressed, and they disappear when the market recovers. Baby boomers, considered to be the wealthiest generation today, didn't have it so great when they were in their 20s and 30s. In the midst of building their careers and growing their families and purchasing their homes, the economy experienced 4 recessions, 4 rounds of high unemployment, and high mortgage rates that peaked at 18%. It took another 10 years to get back below 7. During that time, home sales were low, but home values did not decline, similar to today. So that's why experts are saying that this market is more similar to 1980 than 2008. I don't think there's anybody who bought a house in the 80s that regrets it today. Looking back in hindsight, it's always a great decision, even though money may have been tight and interest rates were high. Every market is different, especially today. It's highly recommended to consult with an experienced real estate agent who's seen several market cycles and a lender who's fully aware of available loan programs. I have a feeling that new loan programs are going to start emerging because of the market situation. I think we're going to see a lot of FHA and VA loan assumptions, wraparounds, seller carries, seller incentives, down payment assistance, and other tools designed to help you on your way to homeownership and building wealth. I hope this information was helpful. Comment below and let me know if you have any questions, and until next time.